1907 bank run and gold in 2023.
This video is brought to you by Interactive Brokers, ranked best online broker by Barron's for the 5th consecutive year. But more about them later in the video. So Peter Spina from GoldSeek shared this chart. So this is 5-year gold in Aussie dollar terms. And, well, the Australian gold price hit a fresh record high. It ticked over $2,900 in Aussie dollar terms. So check this out. How's that for a chart? So, I mean, this is a very short-term 5-day gold chart in Aussie dollar terms. But even before that, you know, gold in Aussie dollar terms was over $2,860 an ounce. Like that's a nice gold price from where it used to be and from where I have been buying it from anyway. And this chart has come from the crypto sniper himself, Francis Hunt, and this is gold in Australian dollar terms. So you can see this chart goes back to the end of 2014, and gold $2,911 in Aussie dollar terms. So you guys know that I've got this US dollar, the dollar milkshake theory. I do subscribe to it. I've got a percentage of my portfolio in US dollars. Many of you will know that late last year I did videos explaining how I was buying short-term T-bills, 3 6-month T-bills. I even did a video on I-bonds where you could get over 9% return yield on I-bonds. Yet 2020-21, I was saying that bonds were the most disgusting asset. So I just parked some cash in there. Now, obviously, a lot of other people were following suit because we saw deposits from commercial banks reducing. Yet, in terms of T-bills, the biggest net buyer was retail. So everyday Americans, everyday citizens were buying short-term T-bills because they could see the yield that they were getting on them. They can see the interest that they're getting on their deposits, leaving it in a bank. And obviously, with banks, their losses on or their unrealized losses on their bonds, which fell 50% peak trough. Some are down 70, 80. Sorry, not 70, 80%, but they're now worth 70 or 80% of their original value due to interest rates rising. That's put them into a difficult position. So Francis Hunt, he's also bearish the Aussie dollar. He thinks there's Aussie dollar weakness linked to China. There's some Chinese weakness. Don't think there's going to be that rush, that demand rush from China reopening, and we really haven't seen it to an extent. So I don't know if that's coming, but also just our debt bubble that we've got in Australia. And, we're going down the crazy Malthusian route of removing all of our fossil fuels in our 2 largest exports. So, we're going to be struggling for US dollars. Where are we going to get the US dollars to pay for the stuff that we need? We're going to find out how the global monetary system works, and so one play on that. So you don't have to go and transfer dollars into Australian dollars into US dollars and leave them in a bank account or buy T-bills or something like that. US T-bills. You don't have to do that. One trade is just buying gold. As the Aussie dollar falls. And here's the thing, the dollar milkshake theory, the end game is the dollar goes up alongside gold because all fiat currencies are falling versus gold. It's just that the US dollar is going up against other fiat currencies. So gold actually will go up while the Aussie dollar is going down. So for a simple play, you can just buy gold. And we're seeing that play out actually right now.
At Interactive Brokers, you can invest in over 150 markets in 33 currencies while funding your account and trading assets in 26 currencies. And you can scan world markets for undervalued stocks using Interactive Brokers' free online tool, Global Analyst. Interactive Brokers aims to offer the lowest possible commissions and access to US and global stocks, ETFs, options, futures, currencies, bonds, and funds from a single unified platform. Margin rates up to 50% lower than the industry, and wait until I share with you how I use margin accounts to make arbitrage by selling options. You can also earn interest of up to 4.08% US on uninvested cash, and Interactive Brokers' smart routing helps achieve best execution by searching for the best available prices for stock, options, and combination across exchanges and dark pools. Award-winning powerful trading platforms including Global Analysts, Smart Routing, Traders Insights, which is a real-time access to comprehensive research, news and analysis, Global Trader, and their Impact Trading app. Interactive Brokers are listed on the NASDAQ, have over 2 million client accounts, and are well capitalized. They also provide on-demand educational resources for investors and traders of all levels. And as mentioned before, they are a multi-award-winning online broker. So for more information on Interactive Brokers and how you can open an account today, click on the link below in the description. Now, back to the video.
So when Michael Burry compared the current banking turmoil to the Panic of 1907, I was actually... I'd been thinking this for some time because when this happened, everyone was saying 2008 financial crisis all over again. And to me, as someone who studied the Panic of 1907, I was like, no, it's a liquidity problem, not a solvency problem. Now, it may turn into a solvency problem, but this is a liquidity problem. This is the old run on the bank. Everyone wanting their deposits and under a fractional reserve banking system, the banks aren't sitting on all your cash in a vault. And by the way, if you don't know, when you put your savings into a bank account, it's no longer yours. You just lent it to the bank. You have a claim on those dollars. That's what you own. You own a claim on those dollars. It's now the banks. They can do what they like with it. And in a lot of cases, they go and buy long-term mortgage-backed securities and government bonds. And as interest rates go up, the value of those bonds go down and they become unrealized losses. Now, when you go and want your deposit back, they then have to go and sell those assets at a loss. And depending on their capital ratios and whatnot, well, then the bank might be in some trouble. But this isn't a credit issue. So it's not that they've, 2008, they just lent to people who can't afford loans and defaulted and whatnot. Now, it may end up turning into that. We could end up getting there, and we could have banks that do become insolvent. But this is a liquidity issue, and this is more like 1907. Now, I highly recommend you guys. Murray Rothbard I'm a Rothbardian. My favorite all-time economist. His book, The Origins of the Federal Reserve. I'm not going to give too much away because I want you guys to read this for yourselves. I'll put a link in the description below. You can go to the Mises Institute and you can download this in a PDF format so you can have an ebook for free. Go and read it because Rothbard, I think it's in this book, or it might be in this book, The Case Against the Fed. Now, I'll put a link in the description below, but he actually breaks the myth about 1907 and how it led to the Fed's creation. But I won't say any more. I'll just put a link in the description. You guys go read this for yourselves and do your own education. And while you're at it, I recommend Rothbard's History of Money and Banking in the United States as well. Very, very good book. And final book I just want to recommend, because in the times that we're living in, look, it frustrates me seeing that depositors, uninsured depositors, getting a bailout, and it's a bailout for those uninsured depositors. So that's those that have deposits more than 250,000. They knew the rules. This is what I hate. Is we have the game. We know the rules of the game. People don't want to play by the rules, and then when things don't go their way, well, you get the punishment. You should not be bailed out. I got no problem with those that are under $250,000 because they were the rules of the game. We all knew that, so that was fine. Also, one economist who I like, don't always agree with, but Joseph Schumpeter, Capitalism, Socialism, and Democracy. He wrote this, I think, in the 1940s. And the two big points that I took away from this book is creative destruction. That capitalism, you have to have creative destruction. Otherwise, you don't have capitalism. And a lot of people have been talking about that we don't have capitalism anymore. The other thing that I took out of this is that ultimately, because if we don't allow creative destruction, the human nature in us, we want to bail everyone out, we ultimately lead to corporatism. Or some people call it crony capitalism, but corporatism. There's another word that starts with F, rhymes with fascism or something. I'm not allowed to say that word. Unbelievable. Anyway, I highly recommend this book as well. Oh, and just FYI, before we finish up this video, here's a actual chart of the Dow Jones in 1907. So let's see if something similar plays out. So the question is, where to from here? And Jerome Powell, does he do a 25 basis point hike and save face? Does he pause? If we look at the bond market, they're now pricing in the Fed cutting rates. So they're basically going to say to the market, we can't fight inflation, we can't fight CPI because our financial system is so fragile. We have to save the banks. At that point, we get stagflation at best. Or does Jerome Powell say, no, we've got tools to provide liquidity for banks so that they don't go under. We're going to fight inflation. We're going to save the dollar. We're going to fight CPI. We're going to bring back the purchasing power of the dollar. And if that's the case, then we're going to see risk on assets absolutely tumble. I'm talking stocks, real estate, and more bond falls. So that's really the question where we're at. And where we're at right now, people have been asking me, Steve, which way do you think they're going to go? What's going to happen? I will know more in the next couple of weeks as I absorb more information and see where central banks are headed, because you got to put yourself in their shoes and try to get into their minds, and that's very difficult. Are they good guys wanting to do the right thing? Are they trying to usher us into a central bank digital currency? Yeah, and we could go further and further down the rabbit holes. Tom Luongo has a theory. You've got others with other theories, and we'll find out which theories are right in the next little while. So, but either way, for me, the way my portfolio, I'm hedged. If it's save the dollar, cool. If it's save the banks, cool. I win either way. And one of the big players in 1907 was JP Morgan. And you guys have seen this quote over and over and over again. Yet, I don't know, you look at society and you'd think people have never heard of this quote before. Gold is money. Everything else is credit. Tell your friends. Spread this. People need to know. Gold is money. Everything else is credit. Well, technically, you could say that silver is actually money. Silver has been money more times than gold throughout history. Gold has been a store of wealth or a store of value. So, but you guys get it. So I had to share this meme again. I shared it in my last video, but yeah, when you remember you own gold and silver. I sleep soundly. I have some assets that are speculative stocks. I have some speculative assets. I have some other assets that I call value assets that still could fall if things go a certain way. I have some short-term T-bills, which, once again, is losing purchasing power versus CPI, but it gives me that dry powder for a certain event. But I own gold and silver, and that is no one's counterparty. That's no counterparty risk to the gold and silver I own. It is the asset. It is the value, and makes me sleep well at night. Anyway, guys, what do you think? Love to see your thoughts and opinions in the comments below. If you like this video, please hit that like button. Really do appreciate it. Take care, everyone, and I'll see you all again on another episode of Finance Uncut.
And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.